Afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Munib Ali. He's the CEO of Blockstack. Some big news this week for the company. The first in the United States to obtain SEC approval for token offering under Reg A. It's great to have you with us. Congratulations on the big announcement this week. Now, explain to us what that means that you have received approval for the first time.
Absolutely, great to be here. So basically think of this as when people used to buy, or they still buy, equities in companies, there was a time when this was not regulated. And that was almost like a Wild West. People didn't have the kind of information that they should have when they're investing in these companies. And the Securities and Exchange Commission, the SEC, had the 1933 Securities Act. And after that, we have seen kind of like the US public markets flourish over many decades. And part of the credit goes to the SEC for making sure that there's enough transparency in the system. When a company goes public, they are supposed to disclose their financials. They're supposed to give all the information that a potential investor should have access to. Mm-hmm. Now, let's look at the markets for crypto assets. They do trade. And it's unclear what regulations they follow, and it's a little bit of a similar Wild West scenario happening over the past many years. And we've seen a lot of volatility. We have seen a lot of bad actors in that space. When our company, so we are building a decentralized network, and these crypto tokens are a core foundational part of such networks. When we wanted to distribute these tokens to the general public, we were extremely kind of like cautious and careful of any appropriate regulations. And we started working with the regulators, with the SEC, to try and figure out how can these new types of crypto assets fit into the existing securities regulations. Mm-hmm. And that's the thing that just happened, where the SEC has officially qualified our token offering.
Now, it's really interesting because it sounds like it's another way to access the capital markets using digital assets, and it can allow investors such as myself contribute to an early stage blockchain project.
Yes, and so that's the other side of the picture. Typically, if you look at tech companies, they usually start on Sand Hill Road. There's a select group of kind of like large funds or angel mm-hmm. investors who are able to participate in early rounds. And those investors are typically sophisticated, and they are accredited investors or funds. With these crypto networks, what was happening was general public was kind of like throwing their money at these projects without really knowing. They're not sophisticated investors. They don't really know how they should be valuing these things or what kind of information they should have. But they're missing out on the upside of a potentially great technology as well, right? So imagine the first 100,000 users of Facebook. They effectively just used a free product, but they didn't see any financial upside for being the first 100,000 users of Facebook. These crypto assets change that because there is no boundary. There are no like shares of a crypto asset. It's like a commodity. Anyone can just buy it and have a potential financial upside in the success of that network, but it needs to be regulated in some way. And that's why we work in this framework.
So now your tokens are going to be called stacks.
Yes, they're called stacks tokens.
All right, and you know, I think this SEC approval, this really means a lot for the future of different emerging technologies.
Yes, I mean, it's still very early days in mm-hmm. this industry. And I think, like, imagine this is the very first time that a crypto asset has gotten qualification. And we do believe that this opens the doors to other projects, especially more professional, more sophisticated players who are otherwise skeptical of such crypto offerings. Now with the SEC qualification, they can actually feel more comfortable that there is a more regulated path available if they also want to pursue this path.
And I think that was a smart strategy that you used by embracing the regulators and working with them. That's how you start to pave the way for that mass institutional and retail adoption.
Yes, I mean, that's a call we made. And frankly, there was a lot of skepticism out there, mm-hmm. right? Like people in the industry were like, good luck, see you in 5 years, while you're still waiting for getting qualified. And it wasn't easy for sure, because you're trying to figure out a new framework on how to kind of like treat these digital assets. But in general, like it took us like something like 10 months and we got through. Oh. And then people were surprised.
Well, that's a nice surprise. Thank you so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.